The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at that long-term DAX chart on the monthly basis. But before we do that, we have to take off our cookies jar, open it up, and give a few chocolate chip cookies to our good friend Norm Winsky, because he warned us of the big down day coming yesterday. I had two phone calls, actually, folks, about that yesterday, one from South Dakota and another one from Denver, Colorado, reminding me that Norm had done a great job. So hats off to Norm. He's only as good as the last meal, as the restaurant business says, but it was a big down day. As our guest today, we're going to have Stan Harley on us. If you remember, Stan a few months ago was talking about a big bottom coming here in the middle of October, and here we are. So we'll have Stan on at the half-hour break. The next chart we're going to look at, of course, is the DAX on the shorter-term time frame. You can see the nice bottom that was made there, indicative of maybe some type of a rally happening, and that certainly did happen. And then also we had the FTSE that also went down and made a really nice three-drive pattern, making a new low from October 11th and then quickly rallying a quick 400 points. Whether it continues from that level, you know, we will have to wait and see. Since we're talking about the UK, if you'll remember yesterday, we were watching for this chart right here. This was the British pound versus the US dollar. Let's get this up here so we can take a quick look at it. And you'll notice that we were looking at a price to come in around 128.65. And lo and behold, last night, you're not going to believe this, boys and girls, but we hit 128.60. That was the absolute low right there. We've had a pretty good rally of about 60 pips from that level. Really haven't gone anywhere, but if you're in that trade, you're in a risk-free situation now, because if it makes a new low, you want to be out at break even because you bought it right off of the low. And whether that'll be important or not, we'll have to do, one thing at a time as we look at these to keep our risk as small as possible. We're certainly getting incredible volatility. There's no ifs, ands, or buts about that. That's stuff that is really going on quite a bit. Most of this is related to what we're looking at here. This is the U.S. dollar index. The euro has held that level that we talked about yesterday at that 113.80. It stopped right there. We've rallied about 60 pips off the bottom. So we're going to see if that's going to hold. But the longer term, it certainly does look bearish. But so far, it's held that level, extremely well. And as long as it continues to do that, it's still got a chance, to have some type of a little bottom, coming into this level. So that's what we're really watching. Another one that here's one, folks, that should be right at a pretty good bottom right now, folks. I'm not making a buy recommendation or not, but if you'll notice on this Facebook, we're down here right at that 1.618 expansion down there at 146. That should hold it. That should be about it. Now we got some other patterns a little bit lower down about 134, but that 1.618 expansion, you have to pay attention to that one. That's one that is usually, very, very important to keep an eye on. At least that's the way we look at it. Now, I'm going to show you something that you're not going to believe, folks. I'm going to put this chart up. I'd almost call this something out of, what would you call that? One of those game shows. Anyway, I want you to look at this. You see these swings that you're looking at right here, folks? Those are the swings in the S&P 500 on a 2-minute chart all night long. Look at those ABCD patterns and retracements. I mean, it was absolutely amazing how it was doing it. I mean, and each of these moves is more than $1,000. I mean, it's not like the old days when we were in, July and August when it was chopping around with a 10-point range. A 10-point range now happens in a matter of a few minutes. So you've got to be really careful in these markets because they do jump around, a great deal. So we're going to be watching these things very, very closely. The other thing that I did wanted to mention to you, and that is I hope I can get it up here. Here it is. This was what we had with the. Just give me 1 second here. I want to show you the Hang Seng and then what happened to it after that, because these markets, this was the reason why we were down so much yesterday, is because the Hang Seng and the Chinese market just literally came unglued right at the opening. And that's what sent them, into the sewer. And let me see, where is the second one at? I've got these all marked, and then when I got too much. That's what I'm doing. I'm doing too many things. I've got to slow it down. I think this is it right here. Yeah, here we go. Here's the Hang Seng right here, and you'll be able to see what it did. It did close in the upper part of the range, which was relatively good, but that's about the only thing positive that you can say about it. That's neither here nor there, but we're going to be watching it pretty closely. Now, we did have that full moon yesterday, so that might be a pretty good bottom. We don't know. We hit some pretty good targets, as you know, but it remains to be seen if we're going to continue to go down. Longer term, I believe we are, but frankly, I'm sure that we'll see what the rest of the day brings. That's mainly what we're looking at here. Okay, let's take a look here at a couple of these quick markets. We're trading around 2677 in the S&P. We got as high as 2692. There should be some pretty good support around 2674. Small support is what we call, and then we'll go from that level right there. The gold went up and matched the old high almost exactly within $1. Then it broke down $9, and now we're trading at about the 61% retracement at 1238. Boys and girls, one of the most difficult things a trader can do is to change his opinion. And there is nothing in the world as bearish as a bullish as a sold out bear, or as bullish as a sold out bull. So I'm going to have a special report here in the next 4 or 5 days on these metals markets, because someone from across the pond pointed out a couple of things to me that look very, very interesting from a long-term perspective. So we want to, sort of keep a, close eye on that. Okay, now we're just coming down some more here in that S&P. That's what we would like to see. There we go. And then we'll keep watching these as we look along. One other market that looks very interesting, besides the British pound, and that was that Canadian dollar that we've been watching. That also has had a pretty good move. We're getting ready to see some action on that, so keep an eye on that on your in your quiver with all your arrows, so you'll be able to take a look at that. Stan Harley will be our guest at the break. And we'll certainly want to pick his brain, because he's certainly given us some really great stuff, and he's been looking for a really good bottom here this October. And boy, we're certainly getting it, because we've come down to some really serious levels. Let's just show you where we are here. Here's the New York Stock Exchange Index. This was our prediction, from last week when we looking at this. That takes us down, a little bit lower. So just keep in mind that that's the ultimate target now. That 127 is at 11,700 in that NASDAQ. That's trading at 11,969. So that's about another, hate to say it, but it's about another 10%. And the bad news is, boys and girls, are you ready for this? Wait till the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we gave a couple of nice chocolate chip cookies to our good friend Norm Winsky for telling us about the big down day. But, folks, we're going to give the whole cookie jar with all the rest of the cookies in this beautiful ceramic jar that was given to me by my great-grandmother, brought from Italy, all the way from Lake Como to our good friend Mr. Z in the room. I posted the chart for Apple as it opened yesterday. He posted in the room that he thought that the high on Apple was going to be at 224.10. As you'll notice, the ABCD pattern that was there completely. The only thing wrong, Mr. Z, is you were off by 23 cents. It actually went 23 cents higher than that. So try to refine your work a little better. It only broke $10 from that spot, so that was rather pretty good move. Anyway, congratulations, Mr. Z. That's one of the advantages of being in the Tiger room here is you got some really smart people. I mean, a lot of these guys are smart. And they don't, kick in stuff that they're doing, and young ladies too, Maria. But there's some great stuff. I can't tell everybody how good they are, but when somebody does something like that, as it was happening, just like Norm did, I mean, that's very helpful. Maybe they don't work sometime, but these guys have a lot of experience, and it helps a little bit. So who knows? It's just one game after another. Okay, let's take a look at a couple other things that look pretty interesting here. Let's just look at this. Was the euro yesterday. I wanted to bring you up to date on this because the close tomorrow is going to be really important. We've got up to this 114.35. I believe we rallied about 60 pips after that ABCD. We had a beautiful ABCD on the upside. It dropped 100 pips, rallied up 60 pips, so it's following the old Fibonacci sequence. And when we when we have, you're right, Marshall, Mr. Z always does. When we have our guest on, Mr. Stan Harley, he's going to talk to us about Fibonacci numbers and also about Lucas numbers because they sometimes fit in very nicely with mathematics of the market. So we'll have him on coming at the break. So that'll be pretty interesting. Folks, there's a really interesting pattern here that looks extremely bearish on a long-term basis, and I'm going to try to find, well, Let's not do that right now. I finished the Apple. I wanted to make sure I got that Apple thing in because that was really an important thing to be looking at. Here is what we're looking at here with the, let's just get this up here on the longer term time frame with the Apple, because this is where they're counting all these profits and stuff with, what do you call it? Money. And so you want to follow the money. Now we got down to 113.80 in the euro, and now we've rallied back up to 114.60. You can see that the profit objective on this is below 113 on the larger ABCD pattern, and that takes out the low of August. When we take out the low of August, folks, guess what? There's trouble in River City, because if you look at this euro on a long-term basis, just take a look at this chart here, because this is where all this stuff is coming to roost, and that is, you can see if we take that out, we're going to be breaking the 61% retracement from the April low of 2017. What does that set up? That sets up the ABCD. We all know what that ABCD looks like. We're seeing it in the transportation. We're seeing it in the NASDAQ. We're seeing it at bada bing, bada boom. It's everywhere. So it don't work all the time, but when it does, pay attention, Bubba. Pay attention. These things got a chance to really move when they do that. Another one that looks really close to giving up the ghost here, and that is to the downside, is the Australian dollar. Look at this one. You'll notice here that we're now trading below, we're not trading below 70.20 yet, but we're at 70.80. So a little bit of weakness today or tomorrow, and you're looking at some pretty, pretty bad things. Now, we did have, if you'll notice here, we had a big news today in Twitter. I was going to talk about Twitter today. I still wanted to, because I still think we're heading down here, but it jumped up to around 31. We did jump up above that 38% retracement. We closed at 27. We're up about $4, so we're probably taking out that 382 retracement by just a little bit. That's due to good earnings, and whether that, I don't trade Twitter, but that's what it looks like. And these earnings on these stocks are nothing like it was in the .com bubble, but boy, they can sure be big. Look at Tesla, what it's done. It's up 10 or 15% today, trading at 323, because they finally made money. Only the third time since they've been in business have they made any money. So one thing or the other, we'll have to see, how that one turns out. Let me show you one other looks really interesting here. Because of that collapse we had in stocks, you'll notice that the utility index, because people are racing for safety, now because we've taken out that triple top, we might get up a little higher here to complete this pattern, which would be a double top on the utilities. We already know what the transportations has started to do, so that's about it. What do you mean, Maria? Explain to me what you mean by more bearish. Enough is always enough. I'm just looking at the pattern, sweetie. I have no idea, the whole thing. All I can say is that, if we look at that transportation index, you can see we've broken down badly. This is the one from Friday. And, oh, you're just making jokes with me. This is good. Jokes are good. We've now broken down. We're below the 78% level, and we've got a little bit more to go to the downside. But this full moon might be enough to give us a little bit of a bounce. We have to wait and see if that's going to happen, but that's neither here nor there. So we got to be watching it. Oh, my goodness, you talk about sometimes this business is just more fun than you want to think of. Okay, I should spend some time with this. Folks, I got to do, I'm not sure I'm going to be on the show tomorrow, because I've got so many things, there's so many things happening that I've got to, I had to focus, and I've got to be able to make sure I'm focusing correctly. Let's take a quick look at a market that I'm afraid is in trouble, and that is, we bought the wheat the other day. We're out about 4 cents in it, and I just want to get that chart up here if we can find it. I think this is it right here. Oh, no, that's about it. 1 second here. And someone asked about Theresa May. I don't know the politics of it. The chart's saying that they got a chance to hold it together. It really does. It's got a chance to hold it together. Now, it might not last very much, but if we go below that 128.60 level, which we're not very far away from, that's not a very good sign, because you only got a 60 pip rally. So, just don't fall in love with your position. Fall in love with your wife. Don't Don't get involved with that. I'm trying to find the darn wheat chart because it had a beautiful pattern. Unfortunately, it's not working. It's not out very much, but it's not doing what we want. And we have those. We have to protect ourselves because we have to control the only thing we can control, which is our risk. And I wish, I've got to figure out a way to put these into a category that I'm able to pull them up. I'm going to work on that over the weekend, a way to figure out what these things are going to be doing. Okay, anyway, let's just look at this. I'll give you my 2 cents worth, whatever it's worth. It was just 2 cents. This is why we're so bearish here in this thing right here. Yeah, the gold just had a beautiful 61% retracement and gave up $5 in just a matter of a little bit. I don't know if that means anything or not. Let's once we went below that 27.30, folks, that was even though we did rally one more time after that, it was really lights out. And I don't know what the rally is going to be when it comes, but this is only the first leg, folks. The big leg down will not be for several months because we're probably bottom and then rally for a couple weeks, couple months. I'm not sure which. We'll try to figure it out. And then wave 3. That's the one it'll be. So live every day
Larry
in an attitude.
Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we've got Stan Harley on the line. Stan, are you there?
Good morning, Larry, from Phoenix, Arizona.
Well, listen, we have a special thing here at TFNN. You get to put your hand in the cookie jar and pull out a chocolate chip cookie because you said we were looking for a big bottom coming here in the end of October, and bada bing, bada boom. I think we're there. You think this is the bottom, Stan?
I do. I do, Larry. I'm going to go out on a limb here. Yes, I do. I think we're right there. Whether yesterday was it or not, we'll know here in the fullness of time. But from a cyclical perspective and all the things that I track, yes, I do think we're there, Larry. As you and I have discussed in the past, there is a what I call a primary cycle in the stock market that averages 35 weeks. It's not always exactly 35. If it were, it would make my work and your work a whole lot easier. Sometimes it's 30, sometimes it's 40. It's a variable cycle, as all cycles are. So that makes my work very challenging, trying to pin it down. But over the long haul, yeah, it averages right about 35 weeks. And we're right in the heart of the envelope for that cycle to next recur, and I think we're there. So we shall see. We're getting a pop here at the open. Yesterday, for example, we spiked down to a very pronounced low on the charts. I think it was a washout low. I'll note that the VIX, the volatility index, as compared to the level that occurred on October the 11th, that was the initial plunge, and then we, of course, broke to a lower low yesterday. The VIX did not go to a higher level. So that's a divergence that I and a lot of technicians look at, and I think that's a very important divergence to look at.
It really hasn't shown much fear, has it?
Well, my point is that we saw a huge spike in the VIX on October the 11th. We broke lower yesterday, and VIX did not go higher. It went to a lower high. So as a technician, you and I, we look for divergences, and that's a noteworthy divergence. Coming right within the zone of when I think we should see a reversal, but as I say, whether yesterday was it or not, I can't say definitively for sure. My indicators, of course, have not turned. We need rising prices to make them turn. So I'll say this: I think we're awfully doggone close, and that's the best I can say.
So what would be say this just hypothetically say we're trading here like say 2674 in the S&P right now, E-mini, and the low is at 2652. What kind of close would you need today to get a confirmation that a bottom is in, Stan?
I can't answer that specifically in terms of a numerical factor. What I want to do is look at the market action throughout the day. If we see all of what I call the big five for me are the Dow Industrials, the Dow Transports, the New York Composite, the S&P 500, and the NASDAQ Comp. We see all of those turn convincingly, and then I need to see indicators that I have in my spreadsheet modeling that measure both price velocity as well as price range. They need to turn. Then I can say, oh, okay, well, then the low is behind us. But I can't do that yet. All I can say is the math, the cyclical analysis, the Fibonacci relationships suggest we're right in the zone. But those things can have some variability. So pinning it down to the day, something we all strive to do, including myself. But I won't know definitively that the low is in until after the fact, of course.
Well, yes, we all of us we're all under the same type of disadvantage because we don't know what the future is. Stan, you spent some time in your newsletter, which is I think is really interesting, on the world indices. What's your feeling on some of these? I mean, we've had moves in some of these markets that have been far more extensive than ours. Do you think these also have a chance of bottoming in here?
I do. What is interesting, Larry, throughout this bull market, as a general statement, the major world indices, particularly the European indices and the UK FTSE, the German DAX, the French CAC, tend to move in concert with the American indices. But at important pivotal points, like important highs and lows, I find that they tend to frequently turn ahead of ours. So that's a good leading indicator, particularly the British market, I find is the most important market of all to monitor. And all of these indices, I'll point out, made their highs several months ahead of ours. Of course, recognizing that divergence real time is always the challenge. But here's the next point that it's a little bit almost troublesome. They have really come off their highs, and they are all back down in the vicinity of their lows of a year ago, and some have even broken even lower than that.
That's troubling.
What the implications? Well, I'm not sure what to make of it, and I'm going to need some time to study and think about that. I think we're probably going to see one more ramp up into the next 4-year cycle top later next year, and perhaps we see the American indices go to a yet higher high in that move, and the European indices fail to confirm, and that's a divergence that after the fact that we can all point to and say, hey, look, there it was so obvious. Don't know, and I just need some time to think about that whole thing there, Larry.
I think having the patience to figure that out is always a good thing, my friend. I fight it every day. Stan, you work with Fibonacci, and you also work with Lucas numbers. You want to explain to the folks what the Lucas numbers are?
Yes. Fibonacci, just as a little background, Fibonacci, that was not his real name. The man's real name was Leonardo, and he came from Pisa, Italy. So his name was Leonardo Pisano. In English, that's Leonardo of Pisa. Mm-hmm. He lived back in the 1100s and 1200s. His father was a customs inspector for the Italian government. So Leonardo had the privilege of traveling around the Eastern European basin with his father. And in that, he got to meet all the merchants that were conducting business with the Italian government. Mm-hmm. And they were doing a lot of things with numbers. In particular, they were using the Hindu-Arabic numerical system. And they were also, for their trading, using a sequence of numbers, of course, later attributed to Leonardo. We now know as Fibonacci numbers. Leonardo went back to Italy, of course, with his dad, grew up, and became a brilliant mathematician. He wrote a book called Liber Rabaci in 1202. And in that book, he said a couple things. He said, first of all, folks, the system of Roman numerals that we all are using here in Europe are archaic and obsolete. The Hindu-Arabic number system is actually superior to ours, and those are the digits, as we now know, 0 to 9. And equally importantly, they could account for decimal ranges, which is something that the Roman numerals could not account for. And he explained in his book that the Hindu-Arabic number system was vastly, vastly superior to Roman numerals for those reasons. In the last chapter of his book, he also talked about the rabbit problem, and he introduced the sequence, which, of course, he was told about by all the merchants in his book.
Hey, stay with us. Stay with us, Stan. We got to pay a few bills, okay?
Understood.
Okay, thank you. Stan Harley.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with Stan Harley of the Harley Stock Market Letter about Leonardo da Fibonacci of Pisa. There's actually a Fibonacci Boulevard over there, right by the statue, or by the Pisa statue. By that was built a couple hundred years before him, as I recall. The Leaning Tower. Anyway, go ahead, Stan. Finish the story about the numbers. I'm very interesting.
Well, we didn't have printing presses or the internet back in those days, so published information did not get easily disseminated as it is today in 2018. So his work went largely unnoticed for some time. It really wasn't until the French mathematician Edward Lucas in the mid-1800s analyzed his work, analyzed the ratio that the Greek mathematician Euclid had done a lot of work on, which we now know as the Fibonacci ratios. Leonardo was not aware of the ratios at all. He was only aware of the numerical counts, and Edward Lucas actually put it all together and wrote a book about it in the mid-1800s, and he coined the term Fibonacci and in effect enshroud that with Leonardo of Pisa. So we now know all of the numerical counts and the ratios as the Fibonacci numbers and the Fibonacci ratios, but truth be known, only the numerical counts were published initially by Leonardo. The ratios themselves, actually, to my knowledge, were found by Euclid about 2,000 years ago. Anyway, Edward Lucas put it all together, coined the term Fibonacci. Edward Lucas also found another series of numbers that he found were equally useful to the ones that Leonardo had found, and we call these today the Lucas numbers. Mm-hmm. They are similar in structure to the Fibonacci series. In reality, they are the Fibonacci numbers multiplied by 1.382. Mm-hmm. And I use them both in my work. What I do is I look at past high-low pivot points and count forward in time the Fibonacci and the Lucas series and look for some type of clustering in the future and put that together with my cycles analysis, and then I come to some kind of reasonable conclusion about a turning point in the future. And that is simply, there's some more complexity behind that as well. But that's what I do in effect, and come to my views as to whether or not we're likely to make an important pivotal turn, either a high or low. And I think we are, right now, as you and I speak, right in the heart of the envelope. I showed in my published work that the October 23rd to the 25th time period of 2018, I had a magnificent clustering of Fibonacci Lucas numbers from past high-low pivot points. Indeed, that the centroid of the whole thing is October 24th, and I put that on in big bold letters in my newsletter. So we'll give that a little variance either left or right, but that's the centroid. So that was yesterday. So we'll see. Was yesterday it? I can't
Well,
definitively say until we get some upturn in the indicators, and that takes rising prices.
Well, you sure got your chocolate chip cookie, so you deserve that. Listen, we're going to have you back on again soon. Stan, thanks so much for alerting us to that October date. I had 3 phone calls from people asking me to put you on the show because they had written it down and say, please have Stan on. So that's why I gave you the call to make sure you'd be able to be on. We'll have you on again soon. What's the best way for the folks to reach you to subscribe to your letter, Stan?
Larry, I've got a new a website. It's www.harleymarketletter.com.
Okay, that's great. Listen, thanks for joining us, my friend. We really enjoy having you on. And keep up the great work, Stan.
Thank you. My pleasure.
Okay, Stan Harley of the Harley Market Letter. I've known him for 40 years. Very good engineer, by the way. Anyway, of course, he does better market work than before, so we'll see what's going on. Folks, the currencies are absolutely getting trashed. We broke down below that key level at 128.60 in the British pound. If you bought that, it rallied about 60 pips, so you either made a $300 profit or you broke even. The euro has now broken below that key support at 113.70. We're down at 113.77 right now, and they're looking rather smoky right here. So we got to pay attention because this money might start moving in a direction that people have not seen it. Maybe it'll be into the interest rate markets. You know, we had the real interesting situation where the Treasury notes, the 10-year notes, are going higher. The rates are dropping faster with the notes than they are with the 30-year bond. Whether it has anything to do with China or not, you know, I'm not sure. But we got enough in the news with all the bombs and other stuff that's going on to keep us busy, you know, for quite some time. But we are having some serious breaking down of these different currencies. I mean, and this is what we're expecting, folks. We're expecting that U.S. dollar to really do very well. I mean, just look at this, folks, on the long-term weekly chart that we bring out all the time, and that is, this is yep, it's still holding so far. The gold is still holding, but frankly, you know, it's not acting. You know, it's hard for the gold to go up with the euro breaking that much. It really is, because there's a high correlation. But we'll see. Anyway, look at this dollar chart on the weekly basis. That low that we made 4 or 5 weeks ago that we pointed out, the ABCD pattern, came in at the 93.50 level, just absolutely spot on. Now we're above 96 handily, and that tells us we're going to go above par, usually to 101. That's just the ABCD structure, and if we got there, you'd be looking at a potential head and shoulders pattern. But right now, this is what it looks like. I mean, that ABCD pattern on that daily, when the euro got to 118.10, was a very, very big thing, you know, to see what happens. Yes, the wheat is not acting good. We have to put that one in the record books as, who can I blame that one on? Let me think about that a little bit. No, that one was mine. We had a string of nice winners, but the wheat, we lost our 10 cents in the wheat, so we'll stand aside and look at it again in the near future, I guess, because the full moon didn't work, and sometimes when they don't work that quickly, the good part is you only have to be a farmer for a few minutes, put a few bucks up, and you don't have to own the whole farm and work it every day like most of the farmers do. So keep in mind. Anyway, I hope that well, I hope is not a good trading word, but Stan has indicated there's a possibility here that there could be a bottom in the stock market, which they certainly could for a lot of different reasons, and certainly he brought some great reasons up. We also know that that full moon sometimes can be very, very important, so we want to watch that. But this is just leg one, folks. There's other legs coming, and they're going to be even more exciting than this one, so we'll do one thing at a time. We've been asked to take a quick look at the Treasury bonds, because this is where we are on the weekly. We've already said that we've hit some type of a bottom in here on the bonds. The question is, how much of a bottom are we going to get? We're now trading near the 139 level. If we get it to the 142 level, that would be a equal move that we had on our last rally that was back in August and September. So we'll see if that's going to happen, you know, to mean anything for you know, anything else. So we'll see how these things start to move. Anyway, stocks are still meandering up a little bit, which is good. If we get gold below the 1228 level, that would be a very, very sign for the gold market, folks. That would not be a good sign. So keep an eye on that one. That will be an interesting one to pay attention to as we see. But we're getting some pretty good volatility here early in the morning, and we want to see how it ends up. So 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're really rocking and rolling in some of these indices. S&P's moving around 10, 15 points at a time, 20 points at a time. We just hit 2667. We're now trading at 2687. So we're getting some really big moves in some of these things. So I don't know if it's related to what's going on in the currencies or not, but we'll have to wait and see. The bonds really haven't done very much. They're trading at 138.23. The notes are still down on the day. So whether these are going to be something to pay attention to, you know, we have to do one thing at a time, that's for sure, because they are jumping around a great deal. If we can get that gold below that 12 1228 level. I believe that's going to be significant because we could have made a double top last night at that 1242 level. Silver is just lagging so badly. I mean, it's just it's really it's just very, very slow. So just pay close attention to that one also, as we see. The wheat is in the record books. We did get it's within a quarter cent of being stopped out, but I guess that's close enough. Anyway, we'll see if that's going to be the case or not. But this volatility, get used to it because it's here to stay, at least for a while. And it'll be accentuated, of course, by the new moon here. The full moon that we had. So keep those in mind. Next week, we're going to try to have our good friend, Bill Meridian of Cycles Research out of Vienna, Austria. And we'll see how Bill has some things for us. And we'll hopefully it'll be as good as the things we get from Norm Winsky and also from our good friend, Stan Harley, who was spot on with the day that he was looking at. So we had two people, Norm and Stan, saying that we had pretty close to a pretty good bottom. And so far, we've had a pretty good bottom. We hit 26.52. We got up to 26.92. So we rallied about 40 points and backed off about, 25 points. So we're in that sweet spot. We're going to see what happens. So that's what we're looking at. Tomorrow will be a Friday, the day before Saturday. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.